The stock markets are breaking down again, yet Bitcoin is doing the opposite. It's breaking past some key resistance levels that have been holding Bitcoin down. And so is all of this fear in the market after Jerome Powell's speech, is it warranted? Are we going to see those collapses that we have been told should happen the entire year? Let's break that down today as we cover what Jerome Powell has been talking about, what the masses are looking at with epic meltdowns and the possibility of the Fed not being able to fix anything. Let's look at what's going on in greater detail. The wall of worry as the markets continue to climb on the back of more extreme fear. Hit that like and subscribe. I know 1 out of 4 of you haven't subscribed yet, looking directly at the analytics right here. And hello to 40 to 50% of you who are from these 3 countries. And of course, the other 50%. Anyway, this is your home of macro cycle analysis, covering the past to forecast the future. Crypto stocks, real estate, Bitcoin, holistic view here. You get the idea. We're seeing what's going on in the markets right now. Let's have a look. Fed Chair Powell speaks. This is the big one. This has sent the markets down 1%. Here are the headlines. Strong economy may need more restraint, but bond markets are helping. So 12 months ago, we were told that the markets were at their worst that we have seen them in so long, and we were expecting bigger and bigger collapses. 12 months ago is right here if you don't know where that is on a chart. And it doesn't take much to see higher lows forming. Higher lows after higher lows forming. We've been told that everything was bad and that we should be expecting worse times ahead. But this is what we've been talking about on the channel here for a very long time. We've seen the markets climb. We're expecting even further upside based on the 18.60 cycle, just as a reminder here. And this is just the best times to be buying as the market is at lower prices because we're looking at a wall of worry. That's what happens in bull markets. You see that time and time again, worry after worry after worry after worry, and the markets keep climbing. So with that in mind, we can probably see that this is all part of the market trying to instill more fear. But when you look at it on the daily basis, yes, we've seen a day down of 1%. We still have the low intact here from last week. We still have the higher lows here, which were all formed on the back of the US debt ceiling crisis. We have the US banking non-crisis. We have recession fears. We have interest rate hike fears. We have inflation fears. We've even seen the start of a war in the Middle East, which they're obviously trying to work out for everyone's sake. We've got the war in Russia and Ukraine. And now the market is basically still trading above those levels. That is the definition of a wall of worry, rather than trying to instill more fear and epic meltdowns and crisis. That, unfortunately, I believe is going to happen in the coming years after we get a boom. The boom is the symptom of the collapse coming. So the collapse will be big, but you need to see a massive boom first. That's the end stage. It doesn't happen on the way down. Bad news comes out at market lows. Good news comes out at market tops. Let's not forget that. So I posted this the other day, just a few days ago now. Did the US government shut down? No. Did the US debt ceiling crisis happen? No. Did the US banking system collapse happen? No. Did the 2020 recession fears come true? No, but some will say it will, just wait until 2023 or 2024. Okay, I'll leave that to you. It's been nearly 2 years. You keep waiting. Did real estate prices collapse? No. Did the so-called World War III, if you remember that was such a big thing in 2022. Did it crash the market? No. Do you see where I'm going with this? So if you answered no to all of the above and took action on your investment strategy, then you are likely part of the smart money, because the smart money sees through the fear that continues to pile up in the market and give us that wall of worry. And so I've posted about the wall of worry on my Twitter X account here. So if you want to follow along with the wall of worry so that you can stay up to date with any of the fearful news coming out, which typically coincides with higher prices forming in the market, great technical spots for setting up your plans or any sort of entries that you're looking at for your own investments there, then of course go and follow on X and then follow this, bookmark it so that you can see these posts come up as they continue to play out in the market. And you can go back and have a look at more of them throughout the last 2 years. I've been posting about all of the wall of worry. Meanwhile, the market continues to climb on a macro scale. All right, and if you want to know more about this and how to put your plans together, like our traders and investors in the Investor Accelerator, making their gains on their trades here, great stuff by Ricardo, 200%, 100% here, another 400%. You know what to do. Hit that subscribe button at the top of the video description for the free crypto and economic report. So this is where we're at. I think it's time to hit reply on that. And we've got a new wall of worry post right now. Jerome Powell speech, October. Let's put that down in history. Moving on to the fear and greed now. We have fear at 28. Last week was 34, but it was just a couple of days ago that we saw fear down to 18. So some of the most extreme levels that we've had in quite some time. Now, this is a slightly different reading here on the sentiment trader fear and greed model, but nonetheless, it gives you some really good insight to potential lows in the market. So you can see this particular low line up with this low on the fear and greed reading. You can see we had some very, very extreme fear at these lows in May. Markets went slightly lower in June and then basically bottomed out in October. So if you're looking for a range to get into the market, remember, we're not trying to buy the low or sell the top. We're looking at a range. Then last year and early this year presented a fantastic opportunity for those entry points. And it seems like the market is setting up for another one of those right now. Now we can take it back to 2015, which was another very fearful time in the market. Extreme fear came in, coincided again with those low points, more extreme fear, more low points. The market took quite some time to get going from this point. Then you had 2016, and of course, away the market went from there. We can extend this, and you can see that that was a pretty significant bull market from this period where essentially the S&P was range bound for a good part of 2 years. Fast forward to today, and you can see the same things happening again. Extreme lows, more extreme lows here. So the extreme fear on that fear and greed model. Then we're lining that up with some of the support levels coming into the market. You've got the 50% going right through the middle here. You've also got the previous tops from the debt ceiling crisis and when the market started to run away again in that January, February period. And so you're seeing that this could be another reasonably good zone for support to come into the market and then for you to make your own decisions with your investment plans. I'm seeing this as a base forming in the market. It's taking some time to basically regroup, consolidate before the next moves happen later in Q4, something that we've come back to quite often. And we come back to it because it's essentially a very similar roadmap to what's happened in the past 10 S&P 500 pre-election years. Next year is the election year in the US. This year is the pre-election year. And you can see from this graph that the market has followed almost, let's not say identical, but very similar to the previous years. You can see that it's had a peak in July. So this is the last 10 pre-election years. So 4 years ago, and then 4 years ago from that, if you're trying to figure out how this works. Then you've got the decline or basically range bound period all the way up until roughly November, December of the pre-election year. Then it starts to climb out. So we may still have another month or so that leads into Thanksgiving timeframe, and then the market starts to climb out of there. At this stage, it looks like it's still consolidating and getting itself set, the market getting itself set for that move out in the later part of Q4 2023 and the first half of 2024. This one shows it a little bit cleaner because it's starting both of the roadmaps from 0%. And you can see that this year in 2023, which is the green line, has been a little more volatile than using the average of the last 10 pre-election years. So the third year of a new president. You can see that we had some tops here through July. Same sort of thing happened here, then a drop off. So the green line is showing a run up, and then we had a drop off. And in the other previous years, this is basically where it flatlines through October, a little pump, a little drop, and away we go from that point. So the roadmap has worked out reasonably well. And we're looking at maybe another 4 weeks, 5 weeks from this point of the market consolidating, finding some range highs, some range lows, and then eventually breaking out sometime in late November or December of 2023. So is this warranted for extreme fear and for crises of epic proportion, meltdowns? Well, based on history, it doesn't seem like that's the case. Just looking at previous roadmaps of what's going on, looking at support and resistance levels as a technician, and also looking at market sentiment with how fearful the market is at extreme lows. S&P 500 still not at these lows yet. Remember, we still have a bit of time based on those cycles. The NASDAQ as well, coming back to those low points here at roughly 14,600 points. It's just bounced off the 50% as well, got rejected there, and it is in a stronger position than the S&P. So there's still the possibility of more room to fall for the NASDAQ because it is in such a strong position. The S&P 500 is testing these levels back here in April and May, whereas the NASDAQ is, well, you can see it's a lot further away from those levels, those prices from the April, May, June period. As for Bitcoin, we are seeing it move very, very quickly right now. I was just recording and it was sitting at 28,600, and you can see the volatility as it's starting to break through these levels. Now, be cautious here because, like we saw before, the market can pump and then start to fade off again. Unfortunately, this pump makes life a lot more difficult because the next resistance level is up at $30,000, which is a long way away from where the market currently is right now, which means you'd have to see consolidation above 30,200 being that it was previous resistance and previous support to show more strength in this range of the consolidation. Because we're closer to the 50% level and we have overhead resistance at $30,000, this just makes life a little more tough for this consolidation to occur here. So if you're unsure of what to do, obviously stick to your plan, have a stop in place. And if you think the market is going to be above 32,000 sometime in the near future, well, that makes life a lot easier. However, if you think the market is going to collapse based on all of the fear and epic meltdowns and crises that are apparently going on out there, then you probably expect the market to collapse from this point, and this wouldn't matter to you anyway. So you make your decision on that. This looks reasonably well for now because we're above the 50% level. But if this was to break down, then of course, you're back in the weaker zone of the 50% level from the range of July down to September, which means, well, it'll be back to testing $26,500 to $26,000. Let's just continue on with where Bitcoin's sitting right now. It's trying to push towards 29 and hopefully get a daily close above that level. Now, with Bitcoin pushing up or pushing down, it just puts pressure on the altcoins, and it continues to put pressure on the big one here, on ETH. So regardless of whether Bitcoin's going up or down, the altcoins most likely are going to struggle. So keep that in mind. It doesn't look like we're there just yet. I've made a couple of videos on cryptos collapsing, and well, basically ETH is the proxy here, and it's continued to slide towards the previous lows set back in June, looking like it's going to go and test those levels. So be careful with your funds if you're looking to DCA into the shit coins out there. Bitcoin, on the other hand, plays a different ball game. And as for the stock markets, well, I think it's just another day of the markets climbing the wall of worry. Stay tuned, like and subscribe. Link in the top of the video description. Get your free crypto and economic report. I'll see you guys back here at the next video. Until then, check that video out and take care.